direct method and indirect method. So friends, in direct method, what happens is the CFO and its sub-elements, all its sub-elements are specifically mentioned, whether they have increased or decreased, or whether there has been inflows and outflows. So inflows and outflows both are mentioned separately for all the items under the cash flow from operations statement, right? In indirect method, what happens is we start with net income. First item we mention is net income, and then we make adjustments to it. Let's say increases in inventory, or increases or decreases in inventory, increases or decreases in receivables, unearned revenues. All these things are mentioned, all these adjustments are made, and then in the ultimate we arrive at the cash flow from operations. So both have their advantages and disadvantages, friends. For example, the direct method is more useful or more easier to understand and analyze for an analyst, because specific items, the source of them and the amount are mentioned in the sub-item list, right? They can make specific predictions and specific amounts are readily available. In case of net income, the advantage is that you understand how the net income has been transferred or transformed into the cash flow from operations. This is the basic difference, friends. The argument here is it is specific and direct, and therefore it is more preferable for analysts and investors because they can make projections around it very easily. Here, the argument is it is more logical. It explains all the reasons why the net income has changed with respect to cash flow from operations, why there has been difference between CFO and net income, and what are the adjustments that have been made to arrive at that. These adjustments are basically accrual accounting and cash accounting timing differences, right? Accrual accounting and cash accounting timing differences. So these differences are explained better in the indirect method. Most of the times, the indirect method is used by the companies, while there are cases also where the direct method is used. Now we will try to understand both the cases, friends. So friends, here I have the cash flow statement for Amazon Inc. We have started with net income here, right? Started with net income, and then adjustments to reconcile net income to net cash from operating activities. This reconcilement has been mentioned directly. Depreciation and amortization. This is basically a non-cash item. This is not a cash transaction that has happened, so this is added back. Then stock-based compensation. These are not cash items, cash outflows, so they are added back. These are basically stock-based payments that have been made to the employees or any other investor maybe. Non-operating expense income net. Non-operating expense or income net. This is subtracted because this is cash outflow. So here what has happened is non-operating expense and income. Here income has happened, therefore it is subtracted. Deferred income taxes. This is subtracted. Changes in assets and liabilities, operating assets and liabilities. Inventory. There has been an increase in inventory, which means cash has flown out, so that is subtracted. Receivables has also increased, which means cash has not come back, so this is subtracted. Accounts payable is positive here. See, accounts payable has increased means cash outflow has been reduced, so that means there is cash. Unearned revenue, that means you have received the cash, whether you have recognized it in the income statement or not, that is a secondary point, but you have received the cash. Similarly, accrued expenses and other, these are also added back. And after all these adjustments, you arrive at net cash provided by operating activities. This is basically the CFO. This is the CFO. So this is the indirect method in demonstration. So friends, here you can see this is basically the direct format of representation. Here there are specific items mentioned: cash received from customers, cash paid to suppliers, cash paid for operating expenses including research and development, interest received, interest paid, income tax refund received, income tax refund paid, other cash received. If you total them, they come to, you can arrive at the net cash flow from operating activities. So this is how the direct representation happens.